This morning we've started by giving the high level review of this important area, customer due diligence, the reporting obligations and monitoring. And we felt that it was important to give this context because many persons ask, what was the driving force behind customer due diligence? And as Kester was so rightly pointed out, there's a lot of concern both at the financial institutions level as well as the general public in terms of providing that information. So I wanted to give the background context in terms of what's the driving force behind the AML CFT program and specifically those issues that persons in the public are seeing and might want to ask questions. We get complaints sometimes and persons are unaware where does this come from. So my attempt here is really to give you the broad level overview in terms of where does this framework come from. So I will start with the international framework that it is a driving, it does where everything is driven from, not the Barbados context, but it's driven by an international context. And then I will talk about what is the FATF, what are the recommendations with respect to AML, CFT, and drilling down to those specific recommendations. Our topic today, and then we will talk a little bit on then how it gets down to the local legislation level. So the FATF, as I call them, the standard setter for AML CFT, that is the Financial Action Task Force, is an international governmental body established in 1989 by the ministers of its member jurisdictions. The mandate of the FATF is to set standards and to promote effective implementation of legal, regulatory, and operational measures for combating money laundering, terrorist financing, and the financing of proliferation, and other related threats to the integrity of the international financial system. So that, in a nutshell, is where the standards relating to AML CFT come from. It comes from this international body, and now we'll move on to what the standards speak to with respect to the particular areas. So there are 40 recommendations, 40, as I call them, requirements with respect to AML CFT, and it's international requirements, not just requirements for Barbados, not just requirements for the Caribbean, but 40 recommendations that run a gamut of issues, whether it's legislation, whether it's law enforcement, whether it is the supervisory framework, whether it is the role of the financial institution, what is required to bring everything together to have an effective framework for AML CFT. So the 40 recommendation or the FATF recommendations set out a comprehensive, consistent framework for measures which countries should implement in order to combat the money laundering and terrorist financing threats, as well as the proliferation of weapons of mass destruction. And I would speak to there are several essential measures that countries should put in place, but I am targeting the measures that speak to applying preventive measures for the financial sector and other designated sectors, because that is the one that I think this particular discussion would more link to in terms of the essential measures. So I go now to the 40 recommendations and I drill down to Rec 10. Rec 10 deals with the customer due diligence aspect of the recommendations or requirements. And that spells out what the customer due diligence requirements are at the international context. And this particular requirement or recommendation is focused on the financial institutions. And we might ask ourselves, who are the financial institutions? Because people speak a lot about the banks, we talk about the credit unions, but this particular category is very wide. It's not just the banks and the credit unions. It speaks to the insurance companies. It speaks to money value transfer service businesses, investment companies, money lenders, and a slew of financial institutions fall under this bucket that are required to meet the requirements in terms of customer due diligence. So I would say, what was the requirement? The requirement is to identify and verify customer identification well, the customer's identity using reliable, independent source documents and data or information. So that is where really the crux of the matter comes into play, where the financial institution has to request this information, making sure that it's reliable, it's from an independent source, and provides them with the information that allows them to know who the customer is. It's not just for the individual customer, but for the corporate or the what you call the legal persons and arrangements. So the beneficial persons behind companies, we also will want an understanding who the company is, who the ownership of the company is. So that's where we talk about identify and verify the beneficial ownership of legal persons and arrangements. It also speaks to understanding the purpose and intended nature of the business relationship. So that's where now they will get into what do you do, what does the business do, how does it generate its funds, sorry, and building a profile to ensure that they're clear when funds come through the financial system, that they're comfortable with those funds and the person behind those funds. And then obviously you can't just talk at the onboarding of the relationship. They're going to come back to you, and I think Cassie would have touched on that. There's not just a one-off position, because as you know, persons change, the jobs change, the particular business change. So there's a need to constantly update those records to make sure that it's up to date. And then scrutinize the customer transactions, monitoring. That is another key part in terms of the role of financial institution, because in monitoring, they can determine um, whether the transaction is legitimate, and it speaks not only to being legitimate in terms of should it be legitimate to pass to the financial institution, but also protecting the customer, because by knowing what funds come into the account, or knowing who should take funds from the account, helps me to protect my customer as well. And it also serves a purpose in disrupting crime, in terms of when you are able to identify those transactions that might not be on the up and up. So now I move on to recommendation 22. So recommendation 22 also deals with customer due diligence, but it deals with another sector in terms of, before we spoke about the financial institutions, but we have what you call the designated non-financial business entities and professions. So these are what we call the gatekeepers. These are those entities that can facilitate the engagement or facilitate the vulnerabilities in terms of the financial system, because customers might use those entities to facilitate their illicit transactions. So those entities that might fall into that bucket from the international perspective would be casinos, real estate agents, dealers in precious metals and dealers in precious stones, lawyers, notaries, other independent legal professionals and accountants, trust and corporate service providers. And it's not every activity conducted by all of these players, but specific activities that are of a financial nature that could result in vulnerabilities to the jurisdiction. So for these particular players and for the particular transactions that will be of a financial nature, they too will also require to comply with the recommendations as set before for recommendation 10, which we would have gone through for the financial institutions. So I will move on now to speak to the international framework for reporting and suspicious transactions. And that is recommendation 20, reporting of suspicious transactions. If a financial institution suspects or has reasonable grounds to suspect funds are the proceeds of a criminal activity are related to terrorist financing, it should be required by law to report promptly to the Financial Intelligence Unit. So, so, so everything that we spoke about before, the due diligence, the monitoring, basically culminates in ability for financial institution to determine whether a transaction is suspicious, and therefore can determine whether a report can be filed with the FIU. And I will leave it there, because I know Kurt will provide further detail on that aspect of the discussion. So we spoke about the international framework. We spoke of the requirements of the FATF, and that drills down now to the local framework because obviously every jurisdiction is different. Every jurisdiction has to comply with the requirements. So therefore, every jurisdiction has to set their own laws in relation to AML CFT. And therefore, our framework speaks to the Money Laundering and Finance and Terrorism Prevention and Control Act. And the particular sections that deal with customer due diligence is section 15, and then section 23 speaks to monitoring and reporting. And that kind of brings everything into the local context, making sure that we are consistently and comply with the international framework. And then we have other enforcement means whereby the various supervisors, the various players in the AML space have developed guidelines that allow us to provide more detailed requirements for our licensees, for our registrants to ensure that they are clear what the requirements with respect to AML compliance is for the jurisdiction of Barbados. So we have guidelines issued by the central bank for the banks, the money value transfer service providers, for the finance companies. We will have guidelines issued by the FSC for their registrants and their licensees, and the IBU would have issued guidelines for their players as well, which being mostly the trust and corporate services providers. So I would leave it there for now, as I know Sterling is itching to come in and give the on the ground context in terms of the customer due diligence. So I would now turn it back over to Abina. Thank you.
Thank you, Jennifer, for laying the foundation and providing the domestic framework which financial institutions must consider, as well as the international requirements which we collectively must adhere to as a country. Our second section will be focused on the customer impacts of customer due diligence requirements. And it is now my pleasure to introduce Mrs. Sterling Benskin-Murray, who many of you know is a specialist in this area. Sterling is the General Counsel and at various times has acted as the Deputy Chief Executive Officer, Supervision and Regulation of the Financial Services Commission. As head of the Commission's AML unit, Mrs. Benskin-Murray also developed and implemented the Commission's AML CFT risk-based framework for monitoring of the insurance, securities, and credit union sectors. She's a certified anti-money laundering specialist for the past 12 years. Sterling is an experienced negotiator, an attorney at law of over 25 years experience, and a seasoned regulator who holds a master's in regulation and policy. She was the first general counsel of the Fair Trading Commission and the former assistant director of legal services and enforcement with the Bermuda Monetary Authority. Sterling is a Canadian lawyer. She became a member of the Ontario Bar in 2001, the Barbados Bar in 1987, and the Bermuda Bar in 1992. She sat on several boards and is a regular moderator and presenter at key financial sector, law, and AML CFT conferences. A former law lecturer in Bermuda, Sterling is an adjunct lecturer in negotiation skills at the Sagicor Cahill School of Business of the University of the West Indies. Sterling, please take it away.
Good morning, ladies and gentlemen. And I want to make sure I get a little thumbs up to make sure that you're hearing me correctly. Let me take this opportunity to say this is the most exciting DFIC conference I've participated in. And do you know why? It is primarily because most of the time we only have the financial institutions. But the brilliance of the Central Bank of Barbados is that we've extended it now. So for this session, we involve the people who are most impacted, I think, with respect to customer due diligence obligations, the customers. And while we as regulators, we are customers of the financial products and services, it is also good to take it for a little while and look at it through the lens of the customers. So my job, thank you, Kevin, for letting me know you're hearing me quite well. So my job this morning is the best job I have. I am going to talk about customer impact. How does all this impact the customer? Yes, we all want to make sure that Barbados as a jurisdiction is compliant with all the FATF guidelines that have been set forth by the various, I call them alphabet gods. but we also want to make sure that on the ground, our people are able to comply with some ease. And I'm going to do like Jennifer, and you give me a while, because those of us who are celebrating the 3rd anniversary of our 16th birthday are often not as adept as we would want to be. All right. But I hope you can see my screen at this point in time. All right. So my first one is talking about the impact. And let me just do one quick little thing here. Great. And give me a thumbs up again, Kevin, if you can see my screen properly. One of the things I really want to make sure that we don't do is that we don't ignore the customer. In all of this, the person who has to produce the documents, the person who's asked to bring another form of ID, the person who's asked to bring something to verify your address are ordinary Barbadian consumers. And one of the things that we are very much aware of is that no business can underestimate the importance of a positive customer experience. If our credit unions or insurance companies and our banks are not having, the customers not having a positive experience, it often means, as the central bank governor, Mr. Haynes said, that some people exit the system, and we have what we don't want, in that we have a problem with financial inclusion. We want persons to be able to comply and provide all the information that we would want. One of the things that persons often have alluded to is that sometimes when they go to the various financial institutions, not only are they asked to bring, they say, the birthday, the blood type, the sister's address, the everything possible, and they don't understand why. The reason I think Jennifer alluded to some of it just now is that, yes, we have the obligations that have been imposed on us, yes, by FATF. But in our local legislation, the banks, the credit unions, and all our financial institutions and designated non-financial business persons, they have an obligation imposed on them by law. And that is in our money laundering legislation. And that goes from section 15, 16, 17, and 18, where they are compelled at this point in time, they are required to, I'm getting some assistance here, they are required to establish identity. Then this is by law, right? They're also compelled to verify. I have a little elf here who's trying to help me. Yes, they are compelled also to verify the ID. They are compelled by law as well to monitor the transaction in each account. And they're also compelled by law to make sure that at any point in time, if you change your profile as a customer, if you ask for probably more services, a higher credit limit, they're also required by law to also check to make sure that you are who you say you are. Oh, I'm going to pause a minute because they're trying to do something for me here. And I probably can help as well. Let me just stop sharing for 1 minute and we can talk. Yes? All right. I can speak about this without my presentation quite easily. I would have sent it to my colleagues in administration, and they can assist if they need to. But I want to go ahead and talk about, so they're compelled by law to do that. But one of the things that we are mindful of is that you are not required just to produce the information just for producing its sake. It is not about collecting information. The ultimate goal is to prevent money laundering. The ultimate goal is to prevent money laundering and terrorist financing. The goal is also to make sure that the predicate offenses, which are like fraud and corruption and drugs, that any proceeds from those crimes do not find their way into our system. If you are aware of the national risk assessment that was done by Barbados, one of the things we found that we are very vulnerable to, and one of the threats we face when it comes to crime, very high on the list is fraud. We want to make sure that when customers come in, that we are dealing with a customer whose account this belongs to. So we ask you to bring in ID. Persons are saying that in some jurisdictions, like say Peru and Chile, sometimes persons, they don't have a national ID system. And because they don't have a national ID system, then they allow persons other methods to verify identity. For example, they may ask you to get a referee to sign a letter to say who you are, like how we would do it for our Barbados. When you want to renew your Barbados passport, you can often take a picture to a lawyer or someone, have them sign the back of it, as well as sign the passport form. Other jurisdictions use that. Fortunately, because we have a national ID system, we can rely on our national ID, so we use that. And you can move the slide along to the next one, Freddie. Yes, and the next one as well. And you can go to the last one, because this is where I want to spend most of my time. Go to the next one. Great. So when Jennifer spoke about that we need to identify, go back to the other slide, thanks, so that everyone can see it, the one in the pretty color, that's right. What they want to be able to do is to identify that you're you. Our credit card companies do it when we travel. They identify us first when we start, and then they establish a pattern. They know that generally, if I am doing a transaction, and the transaction is somewhere, in Russia, they would instantly stop the transaction. Great, thank you. I know you're trying to get other persons to mute their mic to make the experience good for all, right? So like our credit card companies, they would, if a transaction happens in Russia, they know my pattern, they know I don't travel that part of the world, they would instantly stop the transaction and usually ask the person to call, or they would call me to ask me, is this a legitimate transaction? Credit card companies over the world do that. For all our financial institutions, they are required to get information so that they can establish a pattern. So they ask you, can you have a job letter? So I know what sort of money is supposed to come into this account. We have had instances that we've heard of where persons have deposited monies in other person's account, and sometimes it may be insider scam that may be going on, where someone's account is being used for an illicit purpose. If we at the bank or if the financial institution realizes that something is going on that account is unusual, then it is up to them, if not if it is money laundering, to make sure they tell Kirk, the FIU, file a suspicious transaction report. So when we ask for all this information for customer due diligence, it is to make sure we have the right person we're dealing with at all times, to establish a pattern, be it with respect to the funds that are coming in and also the funds that are going out, your usual expenses. So if there's unusual withdrawal, we know something is abnormal. And then as Jen said, yes, we have to monitor. And yes, our ultimate goal that I have at bullet 4 there is to protect you from fraud and from identity theft and from reputational risk. Because one of the most damaging things is for your account to be used illicitly, and you have to spend so much time just clearing your own reputation. We know in small societies, oftentimes when your reputation is lost, be it at the individual level, a financial institution level, even as a regulatory level, it is really, really hard to restore. But I'm going to focus here for my last, I know I have about 5 minutes now left, on what I think financial institutions, as they're hearing the feedback from customers, this is where the focus needs to be on. Increase the convenience to your customers by first some more education and communication. This series here is a part of that. We're trying to explain to financial institutions, to explain to their customers why you're doing it. And it's not enough to say because the central bank said to do so, or because the Financial Services Commission has required it. It must be that we are able to explain it to them in a way that they will find it amenable to do what I call my voluntary compliance, bring the information in. My second bullet on the increased convenience, first bullet there is centralization. Very often, customers may be part of a group, and what is happening is every time they go to one of the institutions in that group, sometimes they ask to reproduce the same information. We're encouraging our financial institutions that wherever possible, centralize the data. Let them only have to bring it in one. We, as I said to you, we are customers too, and we have our own, I wouldn't call them horror stories, but not so delightful stories. And of course, the frustration comes up, and the almost seemingly it feels like harassment, where we're asked to produce the same documents over and over again. So we're highlighting the need for greater centralization. And these are things that the regulator doesn't have to mandate. These are things I know our financial institutions will do voluntarily as they get more resources and so on available to them. The second bullet is latitude. In our guidelines that have been issued by the central bank, by the Financial Services Commission, by the International Business Unit, that under the auspices of AMLA, Anti-Money Laundering Authority, we have in there the general power given to all financial institutions to do what we call risk-based application of our principles. And all that means is KYOC, I have it, know your own customer. We do not expect you to require the same thing from all customers. We allow a facility called simplified due diligence, which allows financial institutions that if you think this customer is low risk for money laundering and terrorist financing, this customer may be with you for a long period of time and you already know the products that they use are very low risk, the services are low risk. We allow the latitude to our financial institutions and our DNFPPs to apply simplified due diligence, which means you may not have to ask for the numerous copies of documents that you would normally ask for if you're doing enhanced due diligence. Enhanced due diligence, as you may know, are often things we require for politically exposed persons and their associates, persons who are more vulnerable or have greater opportunity to possibly abuse a public position for private gain. Those are enhanced due diligence. Then we have standard due diligence. Those things, the basic things, bring in the ID, let me know your address, those basic things. But then we know that there are instances where the financial institution, if they do risk-based, if they really see what mischief am I getting here, what are we trying to do? We are trying to prevent money laundering and terrorist financing, that they can assess their customer base and determine out of all these 3,000, 30,000 customers, which of them are high risk, which are medium risk, and which are low risk. And could I possibly just apply simplified due diligence to these ones? That's a question that many financial institutions need to consider. I know in the era where there's such hefty fines, where the rules are constantly changing, most institutions, it would seem, are conservative in their approach. But what we don't want to encourage is one brush for everyone, because all customers are not equal. So when I say there is a latitude even within the guidelines from the regulators, which give you the opportunity to apply various degrees of due diligence based on the customer's risk profile. Then my third bullet there is ask for only what you need. This is something that requires the next bullet touches on training. Oftentimes, the persons who are at the front line, if they're properly trained, they know what discretion they can use. They know if a person doesn't have one type of a document, here is a second substitutionary form of document that can be used. If we ask for only what we need based on the risk profile of the customer, that may seem less frustrating. That may seem less demanding, right? But if we do it where it's across the board, everyone is required to bring the same thing, irrespective of their risk profile, that will cause frustration, which we're all jointly trying to avoid having a bad customer experience. Customers, I'm going to speak to you now and say documentation. Why the need for documentation? Why we're asking you to bring either original or certified copies is because there is so much fraud. And in this COVID-19 time, let me tell you something as well. Fraud has gone to exponential levels. Now, because of the great internet usage, there's so many people even trying to scam persons in Barbados who are not from another region. People are calling through, and because they're intercepting some of your WhatsApp and some of your emails, they're sending emails and communication to financial institutions, and some of them already know your patterns because of the information we have on our social media platforms. They're actually sending, and I have one instance where someone sent an instruction, similar email, similar language that this person would normally use to a financial institution, but asked the financial institution here to pay to a US account. Because this was not the pattern that the person was accustomed to in the bank, because they can see the transaction, they know the documentation they have on this individual, they were able to say something is not right here. This was not a case where it needed a suspicious transaction report, but I'm using it to highlight that fraud is very prevalent. Identity theft is very prevalent. And documentation is important for you to have on your particular customer, because when your staff changes, it is frustrating for customers that because you've had an internal staff change, that this person is saying to you, I can't find the file, I don't know you, can you bring back in? We don't mind, and customers, I think, welcome it if they're asking for products at a higher risk or if their profile has changed and they've been appointed to the statutory board where they're now a pet, or they have been appointed to the judiciary, they may now be a pet, and you may have to apply enhanced due diligence, or they may be asking for a more product that you think is more susceptible to abuse by money launderers. In those instances, yes, you ask for additional information. Let me also see here one other thing. Customers, I encourage you to bear with the financial institutions because the laws are always changing, and sometimes they've had a whole backlog of customers that they never got to because some of them are, most of them are doing it risk-based. So they deal with the high-risk customers first. Then they go to the medium-risk customers to ask for basic information. Maybe they're now coming to you because you may be in the low-risk category. So we're just mindful this morning, and we wanted to invite our customers onto this dialogue because the reason the FSC, the CBB, we exist is one of the things is consumer protection. The customer and customer due diligence is important to us. And we hear some of your frustrations, and we jointly with the financial institutions are deliberately trying to find ways that we can make it simpler, make it more coordinated, and make it more meaningful. I just saw the screen change, which means someone is saying to me, my time is up. So I thank you. Abina?
Thank you,
Yes?
Sterling.
Okay.
Thank you so very much for those practical examples about making our processes fit for purpose while satisfying regulatory expectations and explaining the why behind it all for the persons on the call. From your engagement thus far in the chat, I can tell you're greatly enjoying this session. And I just want to remind you, since I'm prone to do it myself, to drop your questions in the Slido box so you don't forget something pertinent that you want to get a response on during the question and answer section. Our final panelist for today's session will be Mr. Kirk Tate. Mr. Tate will explore suspicious transactions reporting and typologies. Mr. Tate is a former central banker and a trained compliance professional with Australia's GRC Institute, and holds a BSc in management and a master's in philosophy, governance, and public policy from the University of the West Indies. He has served in compliance roles in the financial services sector for over 20 years and is co-founder of the Barbados Association of Compliance Professionals. As a consultant to the Barbados Cooperative Credit Union League, he is the architect of a number of training courses in the AML-CFT compliance. A skilled professional with scholarly interests, Kirk is the author of Island Compliance Risks and the Protocol of Global Finance, a Routledge 2019 publication. On June 2nd, 2020, he joined the Financial Intelligence Unit as its director. At this time, I'd like to welcome Kirk to take the floor.
Yes, good morning to all of you colleagues, and thank you so much for having me at this important session. I was concerned initially because I was the only guy on this panel, but I felt comfortable because I was the only, as it were, the only rose amongst two thorns. Now, having said that, I want to thank Jennifer and Sterling for the opening remarks, and Sterling especially for making it clear as to what customer DD is all about. Now, most of you may know, I know that I'm speaking to the choir here to some degree, but for the public who may be listening, I want to establish that the anti-money laundering or combating the financing of terrorism, or AML-CFT regime, has impacted you and has impacted me in a very substantial way. And I'm mindful that I'm also a customer in this process, and therefore, in as much as I run the FIU right now and head the FIU, the truth is that whatever happens in the banking system happens to me as well, given that I'm a customer of an institution. Now, I want to say that it is important to understand that the idea of customer DD and all the protocols around AML-CFT are simply because in the past, clients or criminal clients, let us say, have been able to reach into the financial system and abuse the transfer mechanisms and so on for their own purposes. So standards have emerged in the last several years that allow law enforcement, if you will, and persons like ourselves, even the FIU, to engage the financial services companies a bit more and receive reports from them that allow us at the FIU to conduct investigations and to conduct research, and in our own way support law enforcement in terms of their own requirements, right? Now, I'm going to look today specifically at the monitoring and reporting aspects of the AML-CFT regime. Now, as you can see on the screen, we have customer DD, as was well articulated by Serdine just now, and we have KYC as well. They're part and parcel of the same thing. But to my mind, the customer due diligence aspect is really the processes of compliance that are aimed towards knowing your client. So knowing your client is really the endpoint you are aiming for. But the customer DD elements are the processes that customers have to respond to that allow companies to know them pretty well. Now,
has left the meeting.
Now, I think that it's important to understand as well that in the early days of compliance, financial companies had a narrative, and I think they still do today, the narrative that speaks to what they require of us as customers is a requirement by the regulator, right? The one that's thinking, they keep saying that, and you know what, to some extent, it is true. But the truth is that with the advent of risk-based assessment and risk-based approach to KYC and so on, the truth is that you can use the KYC requirements to build a new narrative that speaks to protecting clients against fraud. But somehow that's not being factored in yet to what we do. We still keep hearing, unfortunately, that it's a regulatory requirement, right? It tells me that companies have not yet figured out the way to integrate compliance requirements with customer experience, right? And they still struggle a lot with that up to today. That said, we can come back to that later on, and hopefully in the question and answer session. But right now, I want to move on to the monitoring and reporting aspects of what we do here at the FIU. Can I get the slide move forward, please? Unfortunately, it's not moving. It's not moving forward. Right. So under the
has joined the meeting.
Right. Under the Money Laundering and Prevention of Terrorism Act, what we have before us is parts of the act that speak to the importance of monitoring and reporting, right? That is an obligation, if you will, of financial companies. Financial companies in working with customers must find a way and have systems in place that allow them to report to the FIU matters that are considered to be unusual or irregular or suspicious, right? Now, the core elements of reporting have to do with the proceeds of crime. If there's any activity on the client's account that in any way could be considered linked to criminal proceeds or the financing of terrorism, for example, or anything that's unusual or suspicious, right? Or any attempted or aborted transaction, the financial company is obligated to file reports to the Financial Intelligence Unit in order that we can investigate the matter a bit more. And if we need to escalate a further report or what we call a dissemination to law enforcement or other local competent authorities. It may also mean that we may have to connect with international bodies, for example, and also file reports for them as well, right? Now, Serdine mentioned briefly about the COVID environment, and I want to move to that swiftly so we can demonstrate that the COVID context is really, as she said, a context in which we saw phenomenal fraud emerging at a level that we've not seen before. Now, what is consistent is that fraud has been identified as a very high threat to business in Barbados, and has been identified in the National Risk Assessment that was conducted as at December last year, right? So that we did come across a number of patterns or trends that we call typologies that are of note here. And I want to mention a few of them to you. I'm going to speak about local scene first of all, and then move towards the regional and international scene as well. Now, next slide, please. Now, prior to the lockdown, as I said before, we have seen fraud emerging as a serious issue. With the lockdown now, we start even more, because as companies introduced the digital portals to submit documents on, we saw a lot of documentation relating to that was fictitious, that was false, be it job letters, be it pay slips and so on. These documents were all deemed and confirmed to be fraudulent, right? Once the lockdown was lifted and persons began to do business again, we saw an even more exponential increase in fraudulent documents again. And it's felt that persons were working and were not, obviously, they were not receiving income. And so they wanted funds, and so felt that that was the best way to obtain financing through fraudulent means. Right? We also have reports coming into us in the period based on email phishing. Now, email phishing is really a random person who sends you an email, right, who wants to extract funds from you. They tell you a sad story and so on, and depending on your vulnerability, you may or may not respond to it, all right? But the issue is often that you have won an inheritance, for example, not one, you've won a prize, for example, or your inheritance, or their inheritance rather, that they have received. They want to share a portion with you. But in order to access your portion, you must pay them some funds, all right? Believe it or not, some persons have in fact responded and paid money to the detriment, of course. You've had cases where a client's identity is assumed by a hacker, and that hacker instructs the company to send funds to an account overseas. Now, in the absence of any callback procedures in the company, we have found that some persons have in fact been susceptible to that kind of activity. Of course, there's the issue of unusual activity that is framed in a context where you have a client whose operation may be at a certain regular level, but because you are aware of what he or she is doing, any aberration or any excess activity on the account is discovered by you because you are monitoring the client. So that if you observe, for example, activity that is not consistent with the client's account, then that should be reported as well as part of your reporting process. If we go on now to the deposits here, we've seen clients as well. We have reports rather where clients, even in the lockdown periods, right, and these were non-essential businesses that would make large deposits, right, over a period of time and over several days below certain amounts of money, but cumulatively, it's a lot of money, but they make deposits to their account, right, to avoid discovery by the bank's mechanisms. We've also had cases where clients of companies have been mentioned in adverse press or negative media reports, and that for us is often an issue because it means that the individual may in fact be already the subject of an investigation somewhere. So for us, then it means having to disclose that information to an overseas FIU. Next slide, please. Now, at the regional level and international level as well, what we've seen happening is that persons are seeking to leverage the weaknesses or the vulnerabilities of persons in the COVID environment, right? And are seeking to offer them counterfeit goods, essential goods, but counterfeit goods nonetheless, and are engaging, coming across as being legitimate, but they're not, obviously, there are persons who are assuming the role of salespersons in large companies, well-known companies, and offering essential goods, PPE, masks, and so on, right? And are seeking to obtain funds in that manner.
I want to touch base with her. I'll message her.
Now, I want to touch here, just go quickly to the romance scam here, and to let you know that we came across an interesting typology that was shared by our colleagues in the Southern Caribbean, right? Now let's assume Kirk was online, and Kirk developed a relationship with Serlene, right? It's on a remote basis here we're talking about. I also developed a relationship with Jennifer, all right? So along the way, I'm talking to Jennifer either at a dating site and to Serlene on WhatsApp and so on, or Facebook and so on as well. And we're sharing and talking. And because it's nice and cool and I am over 60 or 70 years old, have a friend, I'm widowed or single and so on, I have a friend to talk to remotely, right? And so we began to fall in love, if you will, right? It's at that point, now that person becomes vulnerable to being scammed by me, Jennifer and Serlene. So what I do is that I develop when that happens, you have to send me, Serlene and Jennifer have to send me, right, some funds that I can pay the courier or the shipper, right? And I ask them to send me these funds to my account overseas. And once they do that, I don't send the borrower. Money and I abscond. I have the money and I abscond. So the point here is that the systems of communication of the internet are being used to rob people of their money, essentially, right? So that's a scam that we have seen, our colleagues rather, in Southern Caribbean brought to our attention in the last few weeks, right? Now, if you go back to the international component there, in fact, you know what? Let's skip to the just to wrap up and to give you an update as to what we're doing at the FIU, right? Now, when I joined only a few months ago, I came to a really good team, and the team is focused now on really building out our IT capability. In fact, we rolled out a case management system that it's called Case Connect, and we're currently rather in our testing stage, where we're seeking to get feedback from the frequent filers, if you will, of suspicious activity reports. So far, some feedback has been brutal, and that's fine. But the point is that we do in fact have some feedback that we're working with. And once we get all the issues refined, we're going to roll out a second testing module to see if that has been improved, and hopefully have a fully rolled out STR reporting component by hopefully month end or into the first week of next month. All right. We're also building up our HR component as well. We're trying to get some new staff on board and so on. That will take time, but we hope to have some new persons in place by the fiscal year end in March, right? We're also building out what we call our intelligence products and seeking to engage our competent authorities to help them understand how our intelligence or disseminations, we call them, or reports, can actually help them do their job. We have engaged the BRA, for example. We're working with customs and the excess as well. We've spoken to immigration, and we're trying to help them understand that we have a product that can help them in their own law enforcement and regulatory areas. The other component we're trying to work on now is virtual training. We'll be doing a lot more of this going ahead, and we're going to be more present in the community. The thing is that years ago, the FIU, I'm told, used to be shrouded in secrecy, but now the shift in standards demand that we are more out there and more engaged and more involved with our constituents. So you're going to be seeing more of us in the coming period, and we hope to be able to answer your questions and to be able to have constant in-depth dialogue so we can make things better for our country. Thank you very much. I look forward to your questions.
Thank you very much, Kirk. Thanks so much for your presentation. I look forward to seeing more of the FIU in the upcoming months. Well, I've been loving the presentation, and apparently you have as well, based on the questions that I've been seeing coming in. I do want to remind you to take advantage of the Slido app if you have any questions to ask, and we're going to address some of the questions that have been posed shortly. At this time, however, what I would like to do is introduce one of our interveners, which is Candace Huggins. And just before doing that, I just wanted to remind you to keep your microphones muted because we have been getting some feedback from persons, and I know how it goes, so it could have just gone off by mistake. So just a reminder to make sure that you're muted at this time. And Candace, you can feel free to go ahead and pose some of your questions.
Gabina. Just wanted to say thanks to Sirlene, Kirk, and Jennifer for a great job well done. I am asking questions or seeking engagement from the financial institution's perspective. And I was happy to see Kurt touch on the subject of the COVID environment. And I wanted us to delve a little deeper into that. The way we do business has obviously changed. The COVID environment is but one of the business interruptions that we faced in terms of natural disasters like hurricanes, etc. So I think it has brought home the point that we need to be prepared for a more virtual environment. So I was hoping for some discussion and guidance from the regulators around our approach to that. If we look at third party, or if we look at digital players in our market, where they must be onboarded by financial institutions such as banks in order to operate. I'm speaking about things like digital money, etc. What's our guidance there, given that these individuals and these companies are technically conducting third-party transactions? What's our guidance in terms of collection of CDD? How do we want to approach this as a jurisdiction and from a regulatory perspective where we're in line with the regulators and we're in line with the regulations that we have? Do we need a widening, or, as Celine mentioned, in terms of latitude? How should we approach this? In addition to which, I want us to think of CDD in the context of digitization, remote access. We're increasing non-face-to-face interactions, automation, the use of AI and fintechs and regtechs. These disruptors, and I say disruptors in a very positive sense, these disruptors have changed the way we operate. I think the financial institutions on a whole have basically, I think we're very familiar and we have mastered the basics in terms of CDD monitoring. But this new emerging world will require not just regulatory laws and guidance, but a working together in terms of the regulator, the financial institutions, government. So I wanted us to have some discussion and guidance on these areas. And I see some in terms of one of the questions where someone has asked about, with respect to due diligence applied to fintechs, will the same apply, or will they be required, or will we be required to abide by the same AML requirements for FIs? So I'm not sure who wants to take that discussion point.
If I may attempt to respond to it. Now, just to clarify, the the FIU, once we sit often with regulators and so on and have a chat with them and engage them in different areas, the FIU really is not a regulator per se. We don't set policy, nor do we monitor or supervise. We handle intelligence and we disseminate it to law enforcement and so on. And we do a number of other international activities and train as well. So that's our basic remit, right? Now, if I were to apply my prior knowledge to the current context, I would suggest that, well, in the absence of any regulatory guidance at this time, that companies continue to frame these matters, COVID notwithstanding, within a risk management framework, right? In other words, digital approaches and so on is an operational risk, right? It's a place that fraud occurs. It's a hotbed for fraud and so on. So companies have to at this point, before you even get guidance, right, spend time engaging and looking for ways of mitigating the risk. Now, if you're telling me that you have third-party clients who are doing digital things and so on and digital business, then it means that you have to affirm, because they are possible conduits for laundering money as well, if you will. So you have to affirm to some degree that they have some kind of protocols in place that they can identify customers and know who they're dealing with, so that they also fall within the remit, if you will, of yourselves in terms of being accountable under local anti-money laundering laws. So some kind of attestation or confirmation or audit even or awareness has to be obtained by the institution to develop, as we say, the comfort level you need that your third-party client who's involved in this kind of business has systems in place that allow you to adequately manage their risk within your own space. So I will start there for now, but I think that the risk base, I've always felt this, that the risk based approach to AML CFT, and again COVID notwithstanding, is a gift. I think, to institutions if it is configured properly, right? If it is properly dissected and applied. COVID notwithstanding, right? Companies stand to benefit because they have a good sense as to how to manage these various risks. I stop there for now.
This is Cyriline here, and remember, you've got to help me because I was trying to find something to raise your hand, but being a guidance as to how you would want us to engage with respect to responding to the questions. Could I go ahead?
Yes, please feel free to respond.
Candice, of course, you asked a brilliant question. Of course, you're looking at how dynamic and flexible our financial sector has become. And of course, you're requiring regulators to be nimble and to have dialogue with the people they regulate, so that together we maintain the integrity of our financial economy. Yes, and we know money laundering, as Kirk mentioned, is morphing and is changing because persons are getting clever, and we're going to be just as clever. One of the things I go back to, in that even right now, many of us are involved in lots of dialogue and with respect to the whole virtual assets, digital banking, and various digital products. And a lot of this is only developed by FATF. But there's a true thing that Kirk has said, which is risk-based is always the same. For every institution to do the basic things still work. When I look at risk profile of any individual, you look at geography, the products, the services, whether they're high-risk jurisdiction, and the method they're using. And when we have non-face-to-face, Candice, I know you're expert here, you have to do sometimes some enhanced due diligence for those things. But I think you hit it on the head, so I wrote it down here. So it's not just about regulatory rules, but it is having discussion and come up with mutual guidance, because we are not going back. And I'm grateful. COVID is a blessing in disguise because we're moving now to more remote forms and sometimes distancing infused forms of doing business. So we do have to adjust. But I say, like Kirk, risk-based. Know your customer and know your own customer. Yes? Thanks.
Thank you. Candice, would you like to go ahead with your second question?
Well, I sort of merged all of my questions. So I wanted them addressed in terms of the new and emerging digital environment. So perhaps we can move on. So that's fine.
Okay. Thank you so very much, Candice.
Thank
At this
you.
time, I'd like to welcome our second intervener, Ms. Wanda Messiah. Wanda?
Hi, good morning, everyone. Everyone can hear me well, I hope. I want to thank the panelists for a very comprehensive presentation this morning. I must say that listening to this, it has made my job a lot easier now. I hope that the participants also share my sentiments. I have a couple questions. Candice actually addressed one of them regarding digital guidance. So I'll look forward for that coming down. We do adhere to the requirement to follow international standards until the local environment has established the information. But I want to go back to something Serlene presented and Jennifer earlier about making sure that it's not only about the regulations, but we also want to make it as robust as possible, saying to gathering information for our members. So my question to the panel is, do you think that this is the time now where we can, or we should be considering having a local central repository for information, whereby our members, the different corporates will be storing their information, and this will be one central location to gather that information? It can be private, it can be public. What is the panelist's opinion on that?
Oh, Wanda and Abina, if you don't mind, I want to take that question because I don't think Wanda participated in the recent session we had where I indicated that this was my business idea and this is my retirement plan. I do not understand why she wait until this kind of an audience to join up with them to steal my idea. Of course, Wanda, it would be a great convenience, and my name was going to be Caribbean a search. It was, this world check. My name of already, and the only thing I haven't is reserved the name, and mine was going to be called Caribbean check instead of world check. Indeed, it would really help us to have centralized. We already have our ID. What do you mean where we can just not just check persons, but have all the information collated? That's an excellent idea. And that's why I advocated, let's just do it at our financial groups first. And I know your entity and some of the parts are groups. If we start to do that, then it would make sense for a jurisdiction that is so small, with so much technical expertise, be it IT, be it just human capital and our knowledge base, to have something centralized. And I think a private-public partnership is ideal. At this point, I should note that the views expressed by this presenter are her own and are not necessarily those of the Financial Services Commission. And I say that with a view to job protection. Wanda?
Okay, thank you for that, Shirley. And that means I'll be looking out for the centralized repository from your private business, hopefully. My next question. We would have received guidance from the regulators as to how we are supposed to transact business when persons are entering the financial institutions. For example, you're supposed to remove your mask and show your face to the camera. In terms of monitoring though, ATM activity has increased during the COVID period time, and persons use the ATM outside of business hours. So is there any recommendations as to how you would handle persons going into the ATMs, wearing face masks, wearing shades? It makes it difficult to monitor that activity. We have found workarounds, but I will be delighted to hear what the regulator has to say on that aspect.
Good morning again, everyone. I just want to introduce Esterline from the Central Bank, who will be stepping in to address the question posed on behalf of Jennifer. Esterline?
Good morning, everyone, and thank you very much, Abina. Wanda, you've raised a fairly interesting question with regards to the wearing of masks, and in particular, wearing them while entering ATMs. I just want to say, though, that financial institutions, they need to adapt their operational responses to deal with any risks arising from COVID. Now, it is a kind of balancing act because you don't want persons to further spread the disease on one hand, and on the other hand, you still need to have your own internal controls in place in order to mitigate like criminal activity, right? So it's a balancing act, but it requires the financial institutions to adjust their operational risk policies to accommodate that.
Okay, thank you for that, Estelle.
Sorry, Rhonda, sorry. If I may also just respond to the question, right? Now you're talking about customers. Well, there's this thing called customer experience that must still happen at an ATM, right? In terms of the customer coming to do business, there's no one there. It's a camera somewhere, yes. The customer leaves his or her home and goes into a public context where protocols are in place to wear masks and so on to protect them from any issues pertaining to COVID. So the customer to me is him or herself vulnerable, right? I know the bank is vulnerable, yes, or the credit union is vulnerable as well, but their two elements are vulnerable together, right? Not just the bank, but also the customer. So the question is, who I mean, who or which one of those variables do you submit to? Is it the customer's experience and health and well-being, or is it the company's desire to see his or her face, right? I'm not sure how that's going to work, but to me, there's a bit more effort that needs to be put into to understanding what the customer feels comfortable doing as they enter an ATM, even in the COVID environment.
Okay, point noted, Kirk. So in your opinion, as the director of the FIU, would that be any, because I do agree that we have to consider the customers, the risk to the customer given the pandemic. But in terms of reporting and stuff, if we have to pull footage or anything like that, I guess that's something that law enforcement now would also have to consider at a later date as well.
Right. I think it may require, again, investment or cost to the company, investing in technology that allows you to still see the customer's face. I see on TV a lot. I'm not sure if it's real, right? But surely there's a way, a matrix, kind of a IT support kind of thing that allows you to see a customer's face and build out the contours and so on and still understand who he or she is. If that's something that is actually real, then look into it. But to me, it is just the burden to me on the customer has to be considered in this environment, right? Now, there may be criminal elements, yes, that you have to address, but again, 80% of your customer base are likely to be good people who do good things and who want to do good business. 20% or so may not want to because that's how things are. The question is, what is the risk tolerance that you have for this kind of activity? What's your risk appetite? And once you are clear on that, then you need to act appropriately.
Okay, thank you for your comments. I was more thinking about, when you have skimming and harvesting, but I understand your point. Thank you.
Thank you so very much, Wanda. At this time, I'd like to go to some of the questions that are in the question and answer box. So I will highlight which panelists I'm directing the question to, and in some instances, I'll just direct them to the panel, and you can always indicate who has a preference to respond. Kirk, could you tell us a little bit about what is being done at the national level to better educate the public on what is expected of them going forward?
Okay, this is the question that bothered me many years ago when I was in the compliance field as well. I got so upset that there was no, I guess, formal body or entity that sought to support commercial banks' implementation of AML safety rules. And it bothered me as to why that was the case. Now, being on this side of the fence now, it's much more clear to me why it happened. Back in the days, as I said to you before, the FIU was shrouded in secrecy and had a non-visible role, powerful nonetheless, but non-visible role in the system itself. But standards not require that we shift that posture, I guess, to be more integrating and more engaging of our constituents. Now, having said that, the FIU did in fact was heavily involved in last year's outreach program to the industry, where we had commercial banks, credit unions, and so on, companies involved as well at the Law Enforcement Standards Center. We were able at that point to discuss the risk assessment at the national level. And we hope, in fact, we have planned that this is something that we're going to be doing more often, more frequently going forward. Now, we will have the broader national engagement, yes, but we will have also a bit more engagement of the compliance professionals as well to help them understand our work better and to help them understand how, to engage them, if you will, in terms of the reporting process and helping them to enhance their reporting activities as well. So there's a plan at the high level that we have developed and are developing still actually to have town hall meetings and so on as well, to be in the media more often as well, so that we can frame the issues of money laundering and terrorist financing that would allow the public to be more aware of what's happening in that space. So we are working on it, if you will, Abina. Thank you for your question.
Thank you so very much for your response, Kirk. Esteline, I'd like to direct this question to you, coming out of the question and answer section, which is, what would be considered a low-risk customer? For example, is it the size of the account, the age, the occupation? Just looking for some guidance on that one.
Okay, thank you, Abina. The size of the account, that's one of the main things that the institution will look for, but it's not only size. You would, if it is let's say a company, the financial institution would seek to find out the type of product the company is involved in. Areas such as the duration of the account. For example, it may be like one-off transactions. The customer may be doing just one-off transactions. Right, one-off transactions, that is one of the areas as well that would be considered. The purpose of the account, that would also determine how the financial institution would risk rate the account. For example, well, I don't want to go into the examples, but I would just say that the purpose of the account, that's one of the areas that the financial institution would look at as well. So basically it's those areas. And remember that if the account is rated low, it means that the financial institution, they're going to apply less monitoring to that account. That is why it is so very important to risk rate the accounts at the institutions.
Thank you very much, Esteline. And as a follow-up, would this also apply to an individual? So what would be a low-risk individual?
Low-risk individual may be an account where the person is primarily just depositing, monthly salary and just regular withdrawals. That can be rated as a low-risk account.
Thank you so very much for the additional clarification.
Abina, could I
Yes,
as well?
Sure.
Could I as well? We mentioned earlier about simplified due diligence, and I think that's why our audience is interested to find out who is low risk and to whom should this simplified due diligence apply. One of the people I often think of is low risk. If I were a financial institution, bear in mind I am not, would be, you have those grannies who have their pension checks, and this is the only source of income that they bring in every time. It's the only services used at your institution. They have been doing this for years and years. All they do is withdraw the minimum amount to do their normal groceries and probably pay a little bit on the light bill. This person is not a person who is anyone in their home, is a pet or not in any way associated with the pet. So what we try to do is, as Celine said, not look at the purpose of the account, but you have to know your own customer. There's some small credit unions who I've had dialogue with, and they have very few customers, and some of the customers have been there for years, and all the customers are members. So there's not like people who can walk in off the street and use their services. Among that pool of customers, it is quite easy to identify individuals who use the services at a minimum basis. And one of the examples I must give you is one I found in a jurisdiction, and this is Guatemala. They're one that I really kind of like. They actually conducted a study across their financial sector in 2011, and it was an income analysis study over the various households to find out what the average monthly income. And they found, and they've decided on a jurisdiction level, that if you have any household that makes an income of less than 625 US per month, less than 625 US per month, then financial institutions can apply simplified due diligence measures. Simplified due diligence measures in that instance does not mean that you do away with all CDD, customer due diligence. You must still have some basic form of ID, but the ID you can use is different. Sometimes they'll allow, I mentioned earlier, a letter from a referee, a letter from somebody in the same household. If you don't have an ID, for example, a child, they would get something from the principal or somebody at the school to allow the child to open the account. You have the verification is not as stringent as well. We have all the 4 components of CDD, but just use alternate ways for the person to do it. So simplify just means we don't use a whole gamut, but it does not mean there's no CDD. But among our population, there are persons whose household income may be less, and whilst we don't have it at a national jurisdiction level, any edict that has been given by the regulators or anti-money laundering authority or government or lawmakers, that is why we say to you as an institution, in our guidelines, we give you the latitude to look now and see, I have these customers here and these accounts, they hardly use. All they do is these transactions. The risk profile has not changed for years. Could it be that I can justify to myself, my board of directors, compliance officer, to your board of directors and to your regulator, that is quite appropriate for me to apply simplified measures to these? Yes, among our population, I'm almost sure many institutions are using, we call it SDD, simplified due diligence, because these individuals are considered to them to be low risk profile. I hope that adds by giving some quick samples of what can be done and what is being done. Over to you, Abina.
Thank you so very much, Sterling. Not only does it add to the earlier question, but I actually think it addresses some of the questions that are currently in the box as it relates to reduced due diligence applying to fintechs, as well as the enhanced due diligence that you would have to do for politically exposed persons. So we just want to have some quick lightning rounds questions. I'm going to ask this to the panel as a whole, and we would be asking you essentially to respond within 30 seconds. So one of the questions coming out is, how does an institution go about verifying a customer's credentials, say the national ID card? And anyone from the panel can jump in. But let's not all rush at once.
I don't want to. I'm going to ask. I know Wanda is there, and I know Candice is there as well. Oh, and Kirk is there as well. So I give over to my colleagues.
Well, so national ID, as we know, guys, is a government issued document, right? It has a source. The source is either the immigration for a passport, or what, I'm not sure what the name of the body that does the actual government issued ID, and driver's licenses and so on as well. So the sources are really the verification, if you will, is based upon the source of the ID. All right. I would leave that there at this point, but that's the broader response, I think, to the question, actually.
Thank you so very much, Kirk. Esterline, I'm coming your way with this question. Based on the presentation Jennifer did with respect to DNFBPs, would secondhand car dealerships fall into this category?
I know that you indicated that that was a question for Jennifer. And since I know Esterline is Jennifer's stand-in, I'm going to let my colleagues take that one.
Not a problem.
Second-hand car dealerships?
Yes, please. That seems to be a burning question with our audience.
I'm just wondering why second-hand dealerships. But based on Jennifer's presentation,
just to give you a quick moment while I know you're pulling it together, because I appreciate Jennifer did the presentation. Kirk, I just wanted to pass on a comment that's in the question and answer box for you, which was just a note from one of our participants that they're looking forward to seeing the newsletters and advisories for the jurisdictional trends coming out of the FIU.
Okay, all right. Point taken. I know it was promised. In fact, we discussed this yesterday only, I must say, Bina. And a colleague told me, Kurt, it was promised a few years ago, but we haven't followed through. So I assure you that going forward, we will have substantial documentation in newsletter format that will allow you to see these trends and so on as well. Also, you can probably check our website too, to confirm what's there, because we at times post typologies as well that speak to emerging issues. But point taken that we need to roll out our newsletter component of engagement so we can get people fully engaged in what we do and to what to expect. Now, I just want to tap back Bina quickly to the car dealership question, right? Remember that this is an AML safety framework we're discussing here, and that a car is an asset, an asset that can be used to be converted based on criminal proceeds, right? So second-hand car dealerships, to my mind, are a risk of some kind, especially if money passes in cash to support conversion of the asset, right? I think they should be rated at a high level of risk because of the threat posed. So that would be my response to that specific question. I would suggest that car dealerships, because of the tendency to be paid for, not car dealerships, but cars rather, be paid for in cash at such entities, that they should be perhaps elevated, pegged rather at an elevated level of risk for AML purposes. Thank you again.
Thank you, Kirk, for responding to that. Both the question posed to you directly and the question posed to Esterline. So thank you very much for that. We do have a couple questions regarding disclosures of persons who file with the FIU, Kirk, and I believe this would be with you. Specifically, the question is, what reassurance can be given to attendees in light of the article, if you had an opportunity to have sight of it, where the name of someone who sent a report to the FIU was disclosed? I'm not sure if you're familiar with the matter at this time.
Sorry, I didn't quite hear. Tell me that again, sorry.
My apologies.
Right.
The question was, what reassurance can be given to attendees regarding a Barbados Today's article of yesterday's date, where the name of someone who sent a report to the FIU was disclosed?
Oh, well, that's interesting. I've not read the full article. I think I heard about it, yes. I can respond by saying that I'm not sure how that happened. I joined in June, a few months ago. So from what I can tell, the FIU staff are highly competent and are highly confidential as well. In terms of assurances, we are building out our IT capability that would allow us to have a more, not that we don't have it now, but to have an even more robust approach to confidentiality and so on. Our system is in different tiers, and there's access to information at different levels within the FIU. I can't speak to what happened, that I got out. I have no idea. I do not know. But I can assure you that we are, in fact, building and strengthening systems that will allow us to protect the information submitted by our constituents. I hope that answers your question, Abina.
Well, Abina?
Yes, please.
Could I just piggyback on Kirk there for this one as well?
Definitely.
I want to assure that I've been here a while. I tell people I dye my hair because I've been in town long, and I've never known the FIU to disclose information or for it to get out through our Barbados FIU. Very often, older Barbadians have this thing, you throw a sprat to catch a whale, and because something appears in the press, it doesn't mean that that is accurate, nor that the source, right? The source is from the FIU. So I think in those circumstances, we take these things with a grain of salt, because the FIU has been really one of those institutions that have guarded the secrecy of information sent to them from the time they've started. And Kurt, as he said, will continue that trend. So I cannot, I saw the article, but in my mind, I didn't think the source was the FIU. Thanks, Abina.
Thank you so very much for that additional clarification. I think I speak for us all when we say, as regulators, we take the confidentiality clause of our contracts very seriously. So we wouldn't necessarily be disclosing confidential and private information publicly. There is one question that is in the question and answer box, and I will make this the last question. And I'm going to ask it just to see if any of the panelists are familiar with the matter and can speak to it, which relates to a recent decision with the Jamaica Bar Association versus the Attorney General, and whether the decision would have any impact on the current AML framework in Barbados. And I'm leaving that as an open question in case any of the panelists are familiar with the matter at this time, to which they can give a response.
I know it because somebody said it's a decision of the court, and I know because I am one of the admitted attorneys on the panel, one would expect me to opine on it. I would say this much: I read it with great interest, simply because I'm a lawyer as well, and I dealt specifically with respect to the AML obligations vis-a-vis disclosure for DNFBPs, which include all our lawyers. Let me just say that decisions out of a sister court in another jurisdiction, we pay attention to, but you always have to go back and look to the laws to make sure that they really are equivalent and that we apply comparing apples with apples and oranges with oranges. Of course, it's going to be studied here in Barbados to see if in any way it has any impact, but it does not automatically do that. We have to make sure it's on all fours. At this point in time, I am not in a position to determine or to really opine on whether I think it affects our AML system. So far, I don't think it shakes or impedes our network or our framework vis-a-vis our accountants and our lawyers with respect to their duty to disclose. Yes? All right, thanks, Abina.
Yes. Thank you so very much, Sirlene. And thank you all to the participants who have been sending us so many questions through Slido. We are so sorry that we're unable to get to them all. And we look forward to your comments to us directly. I'm sure you are familiar with our various websites. You can always feel free to drop us a line if there's any specific question that we weren't able to get to that you want to direct to a specific regulator. You can visit the FIUs, the central banks, or the FSC's website and just drop us a line, and we will get back in touch with you as soon as possible. We are out of time currently. And I know we've had a lot of great questions, and I'm happy to see the high interest from our audience. Thank you so very much for attending. We could not have made this session without you. To the panelists and the interveners, we thank you for taking the time to facilitate this presentation. It was very informative. I know I'm saying that as someone who works with the regulator, but the sessions themselves, every time you hear these sessions, they give you a little bit more information, and it makes it so worthwhile to be on the calls.